Let's talk about two areas that I think are particularly sensitive right now. One would be mortgage loan growth. What are you seeing there? And then commercial real estate. What are you seeing there?
Yeah, there is no question that the Fed's actions are having an impact, right? We have seen, as I think was announced earlier today, the mortgage rate on the 30-year fixed rate mortgage all the way up to 6.75%. That's more than double what it was a year ago. So demand has just plummeted. For us, our applications are down over 50%, and I think that's better than the industry in totality.
What about commercial real estate? What is the demand like there?
Yeah, commercial real estate, the demand seems almost unquenchable. Clearly, the increasing cost of financing are having an impact, but the reality is the majority of commercial real estate is housing related, whether that be multifamily housing, whether that be retirement homes, so forth. And we're still seeing in our markets, 95% occupancy on multifamily and year-over-year rent growth of about 15%. So even though financing costs are going up, it's harder for these deals to pencil for the sponsor. We're still seeing sponsors wanting to move ahead.
So builders are still building, which is what builders do, right?
Builders are still building, which is exactly what builders do. And one of the things that we're seeing and that we're hearing about anecdotally is we're hearing some of the large national builders are looking to sell some of their inventory of lots to some of the large multifamily for this build for rent category. Just because there is so much demand for rental units. And if you look at what's happening in terms of affordability for new single family homes with, a 6.75% mortgage, more people are going to be looking to rent than buy.
Let's look let's go down to the Main Street level and what you're seeing there among businesses who are taking out commercial loans. They're not commercial real estate. They're not mortgages. These are business loans. What are you seeing there among the businesses that you service? Is there any slackening of demand? Are they postponing capital improvements? What can you tell us?
Yeah, just like everything we're seeing in the economy, that we get mixed messages. Some people are clearly pulling back. People are nervous about the R word, right? Is a recession looming? What does it mean? What will the recession look like? While others are seeing record profit margins, a record amount of demand. We were just speaking to some local restaurant owners here in Seattle, and they are having their best years that they've ever had, not only from a revenue standpoint, but from an income standpoint. The other thing that we're seeing throughout our markets, hospitality was one of the industries that was hit so hard during the pandemic. But coming out of the pandemic, these hotels are doing phenomenally well. Occupancy rates are well above where they were in 2019, and their profit margins are through the roof because they're charging more than they ever have, and they've been able to basically cut back on their labor, so their profit margins are going higher than they've ever seen.
Two quick questions to conclude. Number one, you operate in, I think it's 8 states, mostly a sort of a spine down the far and Intermountain West with the exclusion of California. Which state is, in your view, the healthiest right now? I bet it comes down to Nevada or Texas.
Yeah, it would be hard to say which of Nevada or Texas. Utah is also doing phenomenally well. Mm-hmm. We are so fortunate to be in our 8 western states. You look where people want to live, it's basically our 8 western states. We're seeing net immigration. We have seen it, and I believe we will continue to see it. The majority of these state governments have been very pro-business. They've taken the pandemic seriously, but they've said we are not going to close down, and you've seen it in the economic vitality of those states.
There probably isn't a city in America that has seen greater real estate price increases than Seattle over the past 2 decades, let's say. Are you beginning to see, with mortgage rates going up where they are you beginning to see some slowdown in price increases or maybe even some price declines?
We are seeing some decrease in prices, not only a slowdown, but some decreases in prices. But I think that's healthy, Tyler. We went too far, too fast. And, if we end up with a 5, 10, or 15% decrease in prices, I think that's okay. As you pointed out on the intro, that's good for consumers. One of the things that people don't fully comprehend is the amount of cash sitting in bank accounts for both businesses and consumers. Going into the pandemic, there was, I think, $13 trillion sitting in deposits on U.S. banks.
Shepard Smith here. Thanks for watching CNBC on YouTube.